Education is expensive. The total estimated cost for an education for a child starting at school in 2023 is around $87,000 as a national metro average for government schools and $300,000 for independent schools. When we look at tertiary education, it can cost between $20,000 and $100,000 in most instances. So it's easy to see why parents are searching for the best alternative to fund these future expenses. Education bonds are a tax-effective hybrid between an investment product and a life insurance policy. So these bonds, they can be purchased through designated institutions, and the products are regulated by APRA and the Life Act. So what are the rules for tax? The bond issuer that you might go through pays tax on the investment earnings. So this is up to a maximum of 30%, and you don't need to include those earnings in your tax return. There is a 10-year tax rule, and that applies to investment bonds as well as education bonds. And this rule is that if the bond is held for more than 10 years, the earnings aren't taxed at an individual level, and it's not assessed for capital gains. Many people consider education bonds tax-free, and this isn't exactly the case. So education bonds are taxed, so they're included in the taxable income of the recipient and not the bond owner. So depending on their age, it is at their marginal tax rate. But minors under the age of 18, they do operate on a different tax rate, with the main difference being that there is a lower threshold before they must pay income tax. For example, a recipient over the age of 18 would be able to receive $18,200 as at 2023 in income before they have to pay tax. For a minor, their tax-free threshold is $416. So many holders choose to wait until the recipient is over the age of 18 before funding education expenses. So what are the rules for contributions? Education bonds, they do have a contribution cap, and an 125% rule applies. So this rule stipulates that you are only able to contribute up to 125% of last year's contributions to be eligible for the tax advantages at that 10-year mark that we spoke about. So an example would be contributing $1,000 in year one and having a cap of $1,250 on your contributions in year two. The earnings are also automatically reinvested. So what are the rules for withdrawals? So the bond can be withdrawn after 10 years, tax-free on earnings, but only for educational purposes. So this includes the obvious like tuition fees, but it can also include living allowances for studying away from home, boarding expenses, books, and equipment. So what are the alternatives? An easy way to think about education bonds is that they are like a managed fund or an exchange-traded fund, an ETF, in a different, more tax-effective wrapper. The downside to this is that there are restrictions on what you can use the funds for to receive that tax benefit. With a managed fund or an ETF, you can withdraw the funds and use it for whatever purpose you would like to. This is a consideration because as much as you can try to predict the future, it's hard to know the plans and the aspirations of the recipient. So there are limits to what can be spent without the recipient paying income tax as a minor, and the full benefit is realised when the recipient continues on to tertiary education. And that tertiary education could be college, TAFE, or university. Education bonds suit investors with a high degree of certainty of the future educational path of the recipient, and they also suit investors that are on or close to the highest marginal tax rate. There are many investment options for investment bonds with varying asset mixes and fees. So it's important that investors are fee conscious when they're looking at investment bonds, as over the long term, they can negate the tax benefits.
This video has been prepared for clients of Morningstar Australasia Proprietary Limited and/or New Zealand wholesale clients of Morningstar Research Limited. Any general advice has been provided without reference to your financial objectives, situation, or needs. You should consider the advice in light of these matters and any relevant product disclosure statement before making any decision to invest. To obtain advice for your own situation, contact a financial advisor.